So about 8 weeks ago, the housing market just completely flipped. The dynamics changed completely. I believe it came down to two things. Let me show you what I mean. This chart, you can see on September 9th, we kind of hit what was a typical seasonal pattern of contract volume dropping. Now, this is a chart of demand. It is a speed chart. So essentially, as demand drops, it just kind of shows you where the demand is on a daily basis. Now, you can see it started ticking up. I don't know if you can see that, but it started ticking up right here, September 8th, 9th, 10th, and 11th. And by September 12th, the dynamic had completely shifted. Now, why is that important? Let's take a look at mortgage rates here. Mortgage rates on September 11th and 12th, we saw the floor in mortgage rates. After that, they started picking up. They kind of hit that 6% level again on September 17th and 18th, and then they shot up for the rest of the month, and then they went vertical. Okay, so let's go back to that chart and look at it one more time. We can see that September 11th, that's where they started shooting up. That was clearly the place where people could start affording to buy. And we could see by the end of the month, they were still moderately low, but by the end of the month, demand for Nashville housing was as high as it was at the end of July, which is just absolutely wild. Now, that's when mortgage rates went vertical, and we could see the demand started breaking a little bit after that. So one oddity about this whole thing is that Williamson County actually didn't break out. This is the wealthiest county. So even though mortgage rates had kind of troughed, they kind of picked up, demand started picking up, Williamson County did not pick up. In fact, Williamson County was just tracking with where it was the year before. That was kind of weird up until October 5th. Now on October 5th, Williamson County started to break out in a very significant way. Now it's up 30% year over year. Now I know that mortgage rates hit 8% in 2023. However, it's a seasonal downtime. And what's odd about this year is we haven't been dropping, we've been increasing. Starting October 5th, demand in Williamson County has been increasing. Now, I'd love to take credit for this because I've been telling people in Williamson County, wait until the fall. And so now everybody's waited till the fall, which I'm going to take credit for that. But I think there's a bigger dynamic at play here. As much as I would love to take credit for it, it started on October 5th. Let's look at the poly market odds on the president. Interestingly enough, through September, Kamala and Donald Trump were neck and neck all the way until October 5th. Now, on October 5th, Donald Trump took the lead. After that, he would be in the lead for the rest of the election, according to the betting markets, and it would only increase. Interestingly enough, the demand in Williamson County coincides with Donald Trump's odds in poly market and odds in the election. They look the exact same. It's just wild to see that. And so you have two dynamics playing out here. You have the interest rate sensitive group, which really jumped on board through September, but has since slowed now that rates have hit 7%. And then you have the wealthier group. There's going to be 2,000 houses in Williamson County that are over $1 million that sell this year. That is wild. By the way, I made a mistake in my last video. I said 33 annualized for $2 million. No, it's 33 a month annualized. We're talking about 800 $2 million houses that have sold in the last 12 months in just Davidson and Williamson County. 800 $2 million houses. That's, to give you an idea, we'll sell 30,000 houses in the greater Nashville area. 800's like 2 or 3% of that. You imagine 1 in 30 houses being over $2 million? Absolutely wild. My point is, I think that the election of Trump actually invigorated demand in Williamson County. And I believe Davidson County is more representative of the interest rate sensitive group. And it kind of came back to reality through October and November and started mirroring 2023 levels. Interestingly enough, 2023, we had 8% mortgage rates. Now, we did see a pretty significant bump after the election. Also interesting. And we'll see if this continues. But here's what I expect coming out. There's a couple things. One is, if you're trying to sell your house the week before Thanksgiving, you're motivated, okay? So if there is a house on the market that has cut their price at least twice, so they've done one price cut, they've done another price cut, and now they're trying to sell it the week before Thanksgiving, that is a house that you can offer aggressively on. In fact, I had a buyer sent me a listing, 1.8 million. They said, look, Ethan, our cap is 1.4, but can you just check on this listing? So I call up the list agent and I say, look, their cap is 1.4, but you know, this house has been sitting on the market. You've cut the price a couple of times. I know it's 1.8 million, but I mean, are we wasting everybody's time? She said, no, come look at it and make an offer. We'll try to make anything work. That's how motivated they are. So look, there's a house that's been sitting there for at least 30 days, has at least one price cut, maybe two, and you want to lowball them. I'm happy to do it. If there's ever a time to do it, it's the week before Thanksgiving. But don't send me a house that's been 0 days on the market and say, hey, let's lowball this. There's no sign of massive market distress. Now, you can look at Airbnbs. They're a disaster, but you know what? Look at this. This is Tennessee hotel tax revenue. Okay, remember August? Big disaster. Guess what? It's flattened since then. Pretty wild. Why? I don't know. It doesn't make sense to me. But you look, I posted this on my newsletter, but you look at contract volume. It's up. Discount percentage, it's down, meaning that the market's doing better today than it was last year at this time. Supply, a ratio of active listings to contract volume, it's flat. It's the same as it was last year, and it's been converging, which means it's very possible that we'll have a tighter supply in the next few weeks. There's a lot of demand. There's no indication in hard data that this market is going to crumble. Now, we do know that rents to mortgage payments are still out of whack. You know, unless you assume your mortgage, they're still out of whack. But we're in a better position today than we were a year ago, which is crazy, okay? Airbnbs, not doing so great, but again, I mean, you saw that. It's not like the revenue just completely faltered. It started picking back up or at least stabilized. And so I find this whole dynamic to be very interesting. You had this by John Authors. Inflation, it's not going down anymore. In fact, it's now starting to be stuck, which is leading people to think that rates will be higher for longer. Now, who knows where all this ends up? I don't have any idea. But the point is that right now, today, great opportunity. It's very soft for the fall, but it's stronger than it was last year. Which leads me to think that in the spring, that it will be a little bit stronger than it was last year. Let's just take a little look at some neighborhoods here. There was one up here that I wanted to show you that I think really represents the dynamics I was talking about. I think it's this one. Is it this one? Let's see. Oh, here it is. Yeah, this is a perfect example of the dynamics playing out here, okay? So we can see in this neighborhood, this is Harbor Crossing in Hendersonville, and you can see the active listings. That's this blue line right here over time, okay? This goes 23 and 24, so it's 2 years of active listings. You see our active listings are as high as they've ever been, okay? They're 45 in this area, high as they've ever been. Discounts, however, are not. Discounts were higher in September, remember that peak, September? And they've been dropping ever since. Look at contract volume. Contract volume has been increasing ever since. We have 17 under contract where we had 3 under contract on September 14th. This neighborhood epitomizes what is happening broadly in the market. And you can see prices while have completely stabilized at this like 215 mark. And I suspect that they're probably new builds. Let me see. Let's just click on listing status. Let's do built info. And you can see, yep, those blue are new, and that's what's driving this pricing in this area. You can see all these new builds. And look at that. The new builds are slowly trending down, which means they're getting a little bit of price pressure. That's why this price is so flat. And notice they're putting pressure on the 264 and 287 we saw last year. It's new builds. I wonder if we can see if they're townhouses or let's do this property subtype. Let's see how many of them are site built. Let's see what the site built are. There you go. Look at that. Site built. Doesn't look like the houses are dropping like the others, but maybe so. With that, I hope you guys have a great weekend, and I look forward to seeing you next Saturday.